Hi everyone. This is Amitabh Chatterjee. I head pre-sales globally for the insurance business unit. Good morning, good afternoon, or good evening from based on wherever you're logging from. Uh, I have the pleasure of introducing two gentlemen, uh, Rajeshwar Jamwal, who heads the uh, product platform practice for Atos in the insurance business unit, and Mr. Sarma Tekumalla, who is the Senior Vice President for Penn National. So in the next few minutes, we'll covering two things. One is basically trends in underwriting in the insurance industry, and generally trends in the insurance industry. And second is how we have added value to Penn National Insurance, which is one of our largest digital transformation customers using a product platform. Um, Also, just a housekeeping issue. If you guys can, if you have questions, please do post it in the Q&A area, and we will be glad to answer as many questions as possible in this spotlight session. Okay, let's have a very interactive session. With that, let's move to Raj. Raj, can you please take over?
Yep, thank you. Thank you, Amitabh. Hi, everybody. I'm Raj Jamwal. I head the insurance product practice at Atos Central. I've been working with Atos Central for 20 plus years now and have led and managed multiple legacy modernization and business transformation initiatives across the globe. Uh, Today, we're going to talk about Penn National, who's one of our key customers. We have a key testimonial from Sarma, who is the VP and works very closely with us on this modernization initiative. And about Penn National, they are a mid-size insurer based out of Harrisburg, Pennsylvania. They just celebrated their 100th year in operation, so they're pretty old, matured organization. They largely sell through 1,200 plus independent agents and write business across commercial and personal lines within United States. So without further ado, I want you to hear from Sarma first, and then we will quickly talk about some of the trends in the property and casualty insurance space, followed by some question and answer session. Thank you. So with that, I'll move on to slide number 5.
We spoke of various emerging technologies and how cumulatively they are changing the insurance business operations. At the core of these technologies are smart underwriting platforms such as Duck Creek. Atos Central has been our trusted partner since 2015, helping us through our transformational journey of migrating away from our legacy application to smart underwriting platforms as Duck Creek, as I just mentioned. Atos Central has leveraged their proprietary factory implementation approach, delivering commercial lines of businesses across 3 different writing companies, and delivered 8 lines of businesses, including workers' comp, business owners policy, that's otherwise called BOP, commercial property, commercial auto, and CPP. They made this happen by extending their suite of Duck Creek accelerators and tailor-made policy conversion strategy to enable faster rollouts of our new products and keep costs under control. Atos Central's business analysts and other onshore team members are embedded within our divisions, and when you walk the floors of our office building, it is impossible to distinguish an Atos Central employee from a Penn National employee. We all work together as one team, and kudos to Atos Central to make this happen. With Atos Central's assistance, we are well on our path to meet several goals that we had set for ourselves. Some of these are improved speed to market for new products, and also along with it goes product agility. Simplified maintenance and upgrade cycles, improved end user adoption and satisfaction, and obviously tied to all this is a significant cost savings also. So the journey ahead is exciting as we overcome the new challenges of our age, like pandemics, and try to keep the digital programs underway. It is imperative to keep an eye open for new age concepts and tools being developed every day. A successful insurer of the future will be one who keeps customer ease in mind at all times while moving ahead at breakneck speed, modernizing systems and the business itself to stay ahead in the relevant new generation. With that, I conclude my talk. Thank you for giving me the opportunity to come and speak to you.
Yeah, after this wonderful testimonial from Sarma, I just want to say that I'm extremely proud to have gotten the opportunity to lead this transformation journey and support our friends at Penn National Insurance in their digital transformation initiative. Now, let me quickly talk about some of the trends in the P&C market, the property and casualty market. The world around us is evolving, and so is the insurance market. This is largely due to the digital revolution, where digital adoption is happening across generation. I mean, as compared to just the millennials earlier, nowadays everybody is adopting to these new standards. Policyholders and agents nowadays are expecting, or rather demanding, a highly personalized and tailor-made coverage through the distribution channel of their own choice. This trend is further accelerated by events like COVID-19 we are facing right now, and people are forced to go on to these digital channels and then do the business there. While personal line insurers, just by the nature of their business, interact with their end customers, most of the commercial insurers today are not really geared up for this revolution. Most firms lack required tools and techniques to gather the right data and analyze it to help them predict how to build the right product models, pricing structures, and the underwriting guidelines. A very small percentage of insurers consider online channels like your mobile apps and websites to be effective sales drivers for them, while most of them still rely on agent broker channels to sell their policies. Also, two major mega trends, that we are seeing: self-driving vehicles and ride sharing. They are really hitting the auto insurance industry majorly. So, self-driving will reduce the human errors and reduce insurance premiums, while ride sharing means there are a lot of young people who were prospective insurance policyholders are now not going to buy cars. I mean, a recent survey indicated that more than 20% of the young graduates in US live in cities do not have any intention to buy cars in the near future. So these two mega trends will reduce the size of property and casualty market itself, and insurance will need to adapt and diversify. COVID-19 provides new challenges in cybersecurity and workers' compensation areas in the near future as well, with the changing working models. All these parallel trends, effectively means that the overall market is also changing with these new evolving product definitions and new distribution models. Some of these were available in the market in small pockets, but their adoption rate is now exponentially going up, like usage-based insurance, telematics, direct selling, small commercial products, etc. There's a lot of innovation happening in insurance tech space as well, which is forcing insurers to change the way they operate. We'll demonstrate some of these after this session today with our partners with Zelros and Dismo, and we are really looking forward to present those solutions to you. Let us start with the initial stages of the life cycle of an insurance product. So there have been significant improvements in the application intake and coding process. This has been accomplished by two growing trends, pre-fill and straight-through processing. By accepting minimal information, such as the name and the address of a business, insurers are able to complete most of the application intake process without the agents or end users having to fill lengthy applications manually. This improves the customer experience significantly. Next, through complex algorithms and AI-based data analytics, systems are able to evaluate the risk and price it accordingly and to produce a quote. This straight-through processing enables simpler products such as auto and renters insurance to produce quotes almost in real time with no underwriter intervention. The more complex risks are, however, still routed to an underwriter for further evaluation. I mean, the amount of business that's processed by straight-through processing is primarily driven by the risk appetite of the insurer. With time and more data, AI can help in recommending pricing to underwriters based on similar data inputs and patterns. This helps in more uniform decisions by the underwriters across the organization and reduces the time spent by underwriter on each referral of the policy. Refill and straight-through processing enable us to improve customer experience and also free up underwriters' time, allowing them to more time to build relationships with the distributors and end customers, which adds more value to the insurer and improves growth. Similarly, the straight-through processing can enable insurers to auto-settle simple claims with no human intervention. Insurtechs are definitely changing the insurance business landscape by providing products and services that couldn't have been possible just a few years ago. So they are enabling inspections of properties by drones, by having the homeowners upload digital pictures without having an inspector travel to the specific site, resulting in significant cost and time savings. Sensors can be placed both in homes as well as commercial establishments to monitor and alert of movements, water leaks, fire, loud sounds, etc. Sensors and mobile apps can track and report on frequency, routes, and driving habits of drivers. The explosive growth of Internet of Things devices and sensors enable the evolution of usage-based insurance products that allow the customers to purchase insurance on per-use basis, like buying an insurance just for a single Uber ride, or purchase insurance just for the time they are away on vacation, and similar such examples. The underlying technology that enables these products are artificial intelligence-based data analytics, big data, and Internet of Things. Earlier, the data was largely used by the actuaries within the insurance organization, but now the advanced data is a hot commodity which actually accentuates the productivity of all insurance functions through high-impact data inputs. This real-time data is collected through Internet of Things and natural language processing-based support systems like telematics, smartwatches, chatbots. This not only powers the insurer, but also provides insights for their external partners like agents to customize their solutions as per end user preference. The customer of today really wants a highly customized, hyper customized solution right now through the digital channel of their choice. Insurance is a highly regulated business and it is process heavy. So robotic process automation is playing a significant role in automating repeated manual processes. Having bots perform these functions with no human intervention, with the introduction of machine learning, the bots are now able to perform more complex processes by observing and learning the processes over a period of time and identifying patterns of decision making where human judgment is involved. With so many parallel trends, digital, insurtechs, ride sharing, and self-driving, we would think it is very challenging for the insurer. But when we talk to the customers, they actually take this as an opportunity to really improve, and experiment. They want to embrace the open ecosystem and to collaborate with mature insurtechs and other specialists out there like us to build innovative solutions and achieve speed to market for new products. Hope you had a glimpse of what the future holds for insurance industry in general. With this, I conclude my session and hand it over to Amitabh. Thank you for your time today.
Hi everyone. So I'm looking at the Q&A box. We have a question from Ellen Carney, our favorite Forrester analyst. The question is, how did Penn National happen to pick the creek? Was that separate from your work? So, Raj, do you want to take that? As to how they happened to pick the creek?
Absolutely. So Penn National. So we started working with Penn National in around December 2015, and so Penn National actually started the initiative close to 18 months to 24 months before we actually got involved. And they were actually working with an incumbent, a large incumbent at that point of time, to implement the product. Obviously, the program was not really going successfully, and that is where we were called in to come and consult, help with the initiative, and that's what we did. Now I've been working with Penn National for almost 4 years now, and while talking to the Penn National senior leadership team, they had a very extensive process for product selection. So they had, and then they have a whole area of products. So they still believe in best of breed rather than taking a full suite of products. So for billing, they use Guidewire. For claim center, they still use Stone River. For policy, they looked at multiple products. Guidewire and Insurity and all the top products which are out there. And based on their specific needs, there were a couple of features, functionality that were very unique to Penn National. And doing that, Duck Creek really came on top, and then that's how they selected the product. So they ran through the product evaluation process, and specifically for some of the key functionalities that they had, and based on the performance of these products, they realized for policy, Duck Creek was the best product for them. I hope that answers the question.
Yeah, I hope it answered the question, Ellen. One of the questions that has come is okay. One of the questions that has come is, will customers go for products like Duck Creek, or are there any instances of insurers building it themselves, right? So that is the question. Maybe Raj, you can take it first, and then I can add to it.
I can take it. So I mean, that's a very interesting, very good question, right? And with things changing, should you go for a commercial off-the-shelf product, which comes with a lot of feature? All of these product companies have invested large sums of money in research, building a platform which really caters to your need, or you build something unique. Now, this challenge has been posed to us multiple times, and see, it really depends on the appetite of the customer. See, if you really look at the market today, the customers are really divided. I mean, some are leaders, some are just followers, some are in between. The leaders, and talking to some of them, they really don't want to be tied to a product platform. I mean, they have a vision of the future, and their worry is, their vision may not always tie with these product platforms, because at the end of the day, these product platforms, look to standardize things, and a solution which can cater to a wide array of insurers. So the large customers, not large, I mean more innovative customers, they are looking for solutions where they have a lot of flexibility in the way they can define the product, build the product, and roll out the products. While majority of the insurers, which don't fall into that category, which are looking for standard solutions, they're just looking for more modern capabilities, being able to follow ISO NCCI standards. They still continue to go with these platforms because that gives them a real head start in terms of building and rolling out the products.
Yeah, I think just to add on to what Raj is saying, right? We are working with a Fortune 100 insurance company, and basically their stated aim is to have a time to market for insurance product in the range of 4 to 8 weeks. And they are interacting with two insurtech companies. They're evaluating them so as to build their own product management workbench and their own flexible component policy admission system, right? So the time to market is going to be very fast. So they're not going to use a standard Duck Creek or Guidewire, or any of the other competitors, right? So I think that's a not bench. But again, this is for larger insurance companies like Raj mentioned. Okay. The second one is will underwriters be redundant in the near future, because we are talking about smart underwriting? So the question here is very philosophical. Underwriters need not be very worried about it. The jobs will not go, but they will be more relationship oriented in future. The focus would be more on complex decision making in complex cases, and building relationships with customers, and less of the low complex cases that will be straight away automated, right? So their role will remain. It's just that their activities, daily activities will change, right? Raj, do you want to add to it?
No, I think you answered it, Amitabh. I mean, the way I see it, you know, I don't think any of the distribution channels is going away. Obviously, with this whole digital revolution, I mean, some of the channels would be adopted more. Now, customers are looking for more options online. They are reading reviews. Obviously, there are new players in the market like big techs, Teslas and Googles and Amazons of the world, who are directly selling to the customers. So obviously, there are new channels getting added, and there's more adoption of those channels. But I don't think any of the distribution channels as it stands today is really going away. It's just a new avenue to the customers on buying through the new channels, or the percentage of business done through different channels may vary.
Okay. Um, we have a question from Ellen again. Any interesting trends because of COVID in terms of decisions that insurance prospects slash clients are making about core solutions? So, anything from a COVID perspective, Raj?
Yeah, no, that there definitely are, and no, customers are looking at their product definitions to begin with, and especially with the anticipation that right now the impact is not really felt, especially in the insurance space, but with later this year, almost every insurer is keeping a lot of money aside. They anticipate claims, they anticipate lawsuits, and all sorts of things are coming in. So with that, the premiums are going to go up. Some of the coverages that were offered earlier are being looked at very closely, and even some customers are really taking advantage of this situation and looking at newer products, newer market segments, especially in small commercial space. I cannot talk about one or two where we are involved due to NDA reasons. But I can tell you that the small commercial direct selling is a hot topic, and people are looking at the way the world is changing again because of this COVID. The new people delivering stuff in their personal cars. Even on workers' comp side, people are really looking at these products to see how they can be sold due to the changing market as per COVID-19.
Yeah, absolutely. I think a lot of lot of changes in terms of their offerings. Um, One more question I have is, how will self-driving affect the underwriting and insurance industry in general, right? So maybe I'll take that. Um, One thing I see is uh, they will have products which are very specific to self-driving. For example, uh, the distribution model will change. Tomorrow, Google's Waymo, which is their self-driving subsidiary, or Tesla, starts selling insurance, because they sell automated cars. So obviously, the distribution model will change. And second, the product itself will change, because uh, the frequency of human errors, is going to be much lesser, because there's no human error at all. But uh, the intensity of the claim, in terms of the in terms of aggregation, right? Because it's an automated car, the aggregate of the claim can increase. So your frequency reduces, but the overall aggregate of the claim, per claim, is increasing, right? So your product is definitely going to change, as vis-a-vis the self-driving industry. So it will be an interesting time. Anything to add, Raj?
Not much there, Amitabh. And no, I mean these models are definitely changing, and no, we need to keep an eye on it. Like you said, to an earlier question, right? So even the usage based insurance, right? So I mean, it was always there, but with this whole COVID-19 thing, I've not taken my car out for the last 3 months, right? And why should I pay a premium of around $80 every month? So definitely, I mean, these trends are going to change, either because of COVID or because of self-driving or new technology that's coming into the market.
Okay. Uh, any other questions? I'm not seeing any. Uh, okay. We have 3 minutes left. So any other question? I guess not. Okay. Um, all right. Then maybe, I mean, maybe we can wait for 1 or 2 minutes and then disband. Yes.
Or we can request everybody to submit the questions, and we can always answer them offline, Amitabh. And
Sure, sure, absolutely. Our contacts coordinates are there in the Atos profiles, so you surely will get the addresses, email addresses. So please do submit your questions to Raj and myself, and we will be glad to answer your questions. Okay. Uh, Thanks, and again, once again, good morning and good afternoon and good evening to all of you. Hope you have a great day. Thank you. Bye.